All right. Good afternoon, everyone. Hope you guys had a great day. On the downside, another 1.34% down day for the SPYs here. 421.59 off the lows of 420.18. Let's take a look at ES first. So, what a bunch of trickery overnight, right? They run this thing overnight, make you feel good, and it just hit a trend line and it rejected, right? And right off the bell, it bounced from this trend line, which is freaking miraculous to me, how they are able to manipulate the market so perfectly. And then, boom, hit that 30-minute FEG and said, bye-bye, JOLTS data. So JOLTS data came in way higher than expected. So that's what I've been saying for the last couple of weeks is that the jobs data, I got to be bearish on the jobs data. You go back to SPY, let's say, back in August, after the lows in August, right? We were running back up, right after August 18th lows in anticipation of a rate pause for the September meeting for the FOMC, right? So on that day, August 29th, we started the day at 442, and JOLTS data came in really nice, right? Good. There's job openings. That's wonderful. And therefore, the economy is strong. The wage growth is okay. Labor is tight. Fantastic. Okay. So we ended that day near 450 levels. Eventually we hit 453 and stalled out ever since then. But see, the landscape, so to speak, right, has shifted. Now it's about, okay, are we really headed into recession? And that's the worry on the street right now. And they're selling every single pop because the 10 years crazy, hit a new high today. The dollar hit a new high today, right? And so the worry on the street right now is every single good data is actually bad, or every bad data is actually really, really bad, if that makes sense. So the JOLTS opening had a ton of openings, over 9 million. So what does that tell you, right? Too high means that, well, people are losing jobs. There's not enough jobs, there's not enough jobs, but there's not enough people employed. So people are getting fired, canned, jobless. Okay, so that means jobs are coming down. Employment's coming down. If employment is coming down, then that means, Powell's putting us into a recession. So, I guess I wish I had the hindsight like I do right now, right? I wish I had this hindsight back at 460, but I didn't. But anyway, that's the overall scope of things right now. All right. Tomorrow you have ISM data, you have more PMI data, and then you have some Fed speaking tomorrow as well. And then Thursday, jobless claims, okay, and then we have NFP on Friday, all right? So what are we expecting here? I mean, are we going to bounce from here or not? That's really what everybody wants to know. We're pretty close to the 200-day moving average at 419.17, and we've been talking about this for 2 weeks, that 200-day moving average is acting like a magnet, okay? I'm pretty sure there's going to be a ton of buyers, and they're pulling this number down. So far, outside day candle, high volume, right? Can't ignore that. Yesterday was nice green volume, but today they sold it all off. All right. You go back to the SPY trend lines that we've been tracking over the last couple of days, all right? And we broke it. We broke it very candidly, solid. I mean, there's just no arguing that point. We broke the trend, all right? Broke the March trends. Are we going to, 380? We'll see. But let's see what happens here, because you see this volume gap that we just moved through today? Yeah, we hit a little bit at the demand here. There is demand here at the 418, 419 level. So that's where I'm kind of looking forward to in the morning. See if they gap us down, trap more bears at 418, 200 day, or maybe even 217, 417, cash out, and fill the gap back up. At least that's the plan tomorrow in my perfect world. All right. Same thing with the Qs. Okay. Same thing with the Qs. Knife through the daily trend line. All right. Said no to the 5 moving average, the 100 EMA, the 50 EMA, all said no. All right. And you got volume today on the Q. So tomorrow, but the Qs, the Q actually did actually Q almost had 2% down day. So you got support here at 353, right? 353, which is the lows from September 28th. Below that, you're going to see possibly this low here on September 27th, which was 351.36. So you're looking for that number to hold. And I know that seems like a bit out there, 353, 351, but that's the next level support. All right. Now, what did do okay today was actually Tesla. I mean, Tesla didn't do bad. Held the 50-day moving average and the 100-day moving average. And while the market was dipping, I mean, Tesla was ripping from 244, which is a 100. And so you got to watch this tomorrow. If Tesla cannot hold these levels, watch out. There will be a little bit more pain on the index. All right. And you got to watch out for Apple tomorrow. Apple inside day today. All right. I want to say that's a bearish harami, and I think it is. All right. It's just an inside day. But since it's green, some can say it's a bullish harami. All right. But usually bullish harami ends with a green day after a red day. All right. So this is just an inside day. No big commentary on that. But it's got to hold that 172, 170 level. Right. So it hit the 170.82 this afternoon or this morning, and it bounced off that. Not bad. Right. So if Tesla, Apple continues to hold, yeah, there might be some choppiness ahead, but maybe a grind up. But you look at Nvidia closed that gap from Friday morning, right? From Friday morning, we closed that gap 434, hit the lows of 432, and closed near the lows here for Nvidia. And it probably has another date with the 100 moving average at 422. It looks like it at this point. All right, we'll see what happens tomorrow. You still got the MACD curling, right? So you got to still be careful. If they decide to squeeze Nvidia, oh boy, it will definitely lift up the market. So there you have it, folks. I mean, another 1.34% down on the SPX. Not looking pretty if this 200-day it doesn't hold. Let's look at overnight ES. Let's see what can happen overnight ES. We can pump, and I'm pretty sure we might. We broke the lows from September 27th, right? We broke it, tried to come back into it, and failed, right? So you guys can see that it failed. All right, there's a 30-minute FEG up here, all right, and all the way back down and bouncing here. So you can kind of see potentially overnight they might try to run this back up to 4278, which was this low, but that's going to act like a resistance now, right? All right, that was support, turns resistance. All right, so as long as we stay under this number overnight or tomorrow, you can kind of tell there's going to be a little bit more pain on the downside. You definitely don't want to see this level, at least reject hard. All right, you need this to break in order to have at least like a doji green day tomorrow. All right, looking on the 4-hour. Okay, 4-hour, pretty bad, right? Okay. Still, I mean, you got a little 4-hour FEG here as well, and that also rejected this afternoon. All right, you do have a FEG down here at 4232 level, so I put a spot here. There's a small FEG down here. All right, but other than that, folks, you kind of start gazing back towards June. Right, ES is back in the June levels. All right, below that, under 4200. And I'm sure, there's a FEG down here as well. Okay, so there you go. There's a 4-hour little FEG down here as well that they might want to take out. Okay, all right. So overall, without going too much into it, I'm bearish for now. All right. Yes, there's going to be bounces. I guarantee you there will be bounces. I'm not saying that I'm bearish and there's going to be a bounce. I'm saying that 200-day is like a magnet right now. And I do believe, and I'm almost convicted that's nearly 100% convicted, we're going to see that number at least once in the next couple of days. If we don't, great, fantastic. Let's buy the dip. All right. But if it hits, that's where I'll be buying the dip. That's where at least we can see, right, how it interacts, how the market interacts with that number. Because if this whole thing is so bad, TNX is so bad, and everything just really, really terrible, yeah, it might lose it. Might lose it with the fashion. But you look back let's just say towards the beginning of the year, all right, when we lose the 200-day, something does happen pretty bad, right? Here we lost the 200-day, dump, right? Here we lose the 200-day, another, all right, and it hits us trend support line at 380 back in March, all right, and that was the March lows before we ripped, right? So you could have a situation where it actually stays under the 200 moving average for a couple of days, down to like 415, 410 area, maybe consolidate around this area here. You take a look at this area here, all right? This was a lot of consolidation back in April before we made a huge move, right? We lost this consolidation area. We're starting to lose this area. If it comes here, this will be interesting. Right. So you can't really say, I guess what I'm trying to say is, yeah, the 200-day is going to hit, but it doesn't mean like, okay, let's just go full port. But we got to wait for some confirmation at the 200-day, right? Because it could very well just come back into the 410 area, 415 to 410 and hang out here for a while. All right. So with that, ladies and gentlemen, I hope you guys had a great day, and I'll see you guys back in the morning. Have a good one.